Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is September 11 and we're starting from euro-dollar pair with Jakub Novak as usual. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.0708 on Friday afternoon, coinciding with the rise of the MACD line from zero, prompted a buy signal that led to a price increase of over 30 pips. It's hit the level of 1.0737, where selling on a rebound resulted in a 20 pip decline. Market balance remained as inflation data in Germany matched the forecast. Most likely, the empty macroeconomic calendar today, both from the Eurozone and the US, will impact volatility and trading volume, with buyers having a chance to trigger a rally ahead of the ECB's monetary policy meeting scheduled for this week. For long positions, buy euro when the quote hits 1.0742. and take profit at the price of 1.0781. Growth will only be possible within the framework of an upward correction. When buying, ensure that the MACD line is above zero, or it just starts to rise from it. Euro can also be bought after 2 consecutive price tests of 1.0704, but the MACD line should be in an oversold area this time, as only by that will the market reverse to 1.0742 and 1.0781. For short positions, sell euro when the quote hits 1.0704 and take profit at the price of 1.0660. Pressure may return at any moment, continuing the bearish market observed recently. When selling, ensure that the MACD line is below zero, or is just starting to drop down from it. Euro can also be sold after 2 consecutive price tests of 1.0742, but the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0704 and 1.0660. The next stage of our review is the next major, GBPUSD. Tin Leo describes. Today, the calendar is basically empty, with no releases to note. The GBPUSD pair slumped and hit the level of 1.2450, around which the volume of short positions decreased. As a result, the pair stopped falling and the market was initially stagnant, after a pullback relative to the recent decline. On the 4-hour chart, the RSI upwardly crossed the 15-meter line, thus reflecting an increase in long positions in British pound. On the same frame, the alligator's MAs are pointing downwards, corresponding to the primary direction of the price. In case the pullback persists, the indicator may signal a crossover between the MA's lines. Keeping the price above a 1.2500 could lead to further growth in long positions. In this case, the pound may gradually recover and move towards the level of 1.2700. The bearish scenario will come into play if the price returns below the level of 1.2450. In terms of the complex indicator analysis, we see that in the short-term and intraday periods, technical indicators are pointing to a retracement phase. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Arif Mokmor. With the penetration of the three important levels of the CCI indicator on H4 timeframe chart, the gold commodity asset indicates that sellers are dominating this commodity asset, even though there is an upward correction to test the equal high 1928.17. But as long as it does not penetrate above the 1935.42, gold still has the potential to continue. The decline is especially supported by the emergence of the bearish continuation ascending broadened in wedge pattern. So gold has the potential to go down and try to penetrate below 1914.79. And if this level is successfully penetrated, the level of the daily bullish fair value gap area in the range of 1903-1911 will be the next target to be aimed at. And finally, here's Laurie Bailey with USDJPY pair forecast. Let's have a look. For the fifth day in a row, the USDJPY pair has struggled to overcome the resistance of the embedded line of the global price channel, its dark blue line on graphic. On the daily chart, there is a divergence between the price movement and the Marlin oscillator. The first bearish target is at 145.90, where the MACD indicator line located. If it manages to breach this strong level, the price could fall towards the target 143.05. In this case, the 144.73 level served as an intermediate level. On the 4-hour chart, the price has surpassed the balance indicator line, its red line on graphic, and is approaching the MACD line at 146.53. A divergence has formed between the price and the Marlin oscillator. The oscillator signal line has already moved into the negative territory. If the price surpasses the MACD line at 146.53, it could further strengthening the downward move towards 145.90. That's all for today. See you online soon and good luck.